Hey guys, this is another look at ZB starting here on the weekly log scale charts. This is price on the left and yield on the right. A super quick review of the macro picture. Since 2011 we had this five-wave move up into highs that looks like a series of three-wave moves. Three up, three down, three up, three down, three up, which is an ending diagonal, which is a terminal pattern. And since this blow off top, we've established this purple channel, which seems to be five waves down, right? This first move here was in three waves. So it goes one, two, three, four, three, four. This fourth wave trading as a lows to lows extension off the bottom of wave one. And then a fifth wave that's just gone screaming from one side of the channel to the other. And again, this is a characteristic of ZB. We've punched the bottom of this channel on a wave 3 and a wave 5, just like on this blue secular channel we punched out on a wave 3 and a wave 5. So it looks like a five-wave move ending diagonal into a blow-off top. And now we have five waves down, which means this is either a wave A of an even larger correction, or it's a wave one of a new secular trend. That's the macro picture. um, and just taking a quick look at this purple channel right here, it's established by drawing from the bottom of the one to the top of the two. And this dashed line is the lower bound, right? Drawn through the low of one and the low of this presumed wave three. And so when we made that swing low, the channel looked like this, right? You had 3 points of contact, the 1, the 2, and the 3. And then on the other side of the channel, this candle traded with a perfect touch. It looked like a 4. And it ran almost 6 points. And I'm sure everyone thought that they were in the trend and they were golden. But this correction, this fourth wave wasn't complete yet, and it came back and reversed hard, took out that high, and actually had a weekly close outside the channel as it was drawn then with those 4 points of contact. And so I think the way to draw it, this is more art than science, is not through this low but through this weekly close down here. So if I can move it back to where I had it more or less, which is about there, so that the wave 3, this weekly wick, is outside the channel and the body of the candle is inside. And when you do that, this weekly close is contained in the channel on the other side. There's a touch there, and almost a third touch there. And so the reason this is significant is that we punched outside not only the sort of weekly closing version of the channel, but even the outer bound of it, the lows to lows version of the channel. And it is, if you're looking for a bottom here, I think it is concerning that they couldn't close it back inside of the weekly channel. There was a battle on Friday and they just couldn't get the close inside there. And in fact, here's that purple channel in trading view, and this they couldn't hold it. This channel was acting as resistance here, and then here, and then here. It was rejected on Friday. So that's something to keep in mind, that they couldn't get the weekly close and back in there. I'm not sure how much that counts for, but ideally we would get some, next week's close back inside that channel. But anyway, uh, we've captured the 618 target of this lows to lows extension, the weekly target. The weekly close was almost right on this target here. And so I think we're now in of this fifth wave. Now we're now in the wave 4 of it. And I'm going to explain why this week gave us a really fat pitch in terms of buying this low down here, and how everything aligned on multiple time frames from the secular trend, yield hitting its secular 41-year channel, the weekly target here, the weekly purple channel, even the outer bound of it, and then channels on the daily and hourly time frame. Everything lined up to make this sort of a perfect buying opportunity down here for a bounce, which is what we got. So, in fact, it's so perfect that it sent me to the 2 hour chart. And, I was trying to figure out, maybe I'm wrong. Maybe this wasn't the bottom of wave 3, maybe this was the bottom of this whole wave 5, but I can't figure out a way to make that work. And so I continue to view this as a, this large purple channel is the 2 year channel we've been in, and from one side to the other, this looks like a one down, a two, and then a big third wave in this gray channel here. It's a 1, 2, 3, 4, 5. And again, you can see that we punched the bottom of the channel on this wave 3, and then we punched it again, only on this wave 5, but within this wave 5 of 5, we punched out on the 3 and the 5. And this underthrow right here was an ideal buying opportunity. On this trading view chart, this purple line is the outer bound of the weekly log channel drawn through lows to lows, and you can see we underthrew that. We underthrew this third wave channel, and we were in the process of underthrowing the weekly log channel, the weekly closing version of it. And we had a bullish divergence on, this is the 2 hour chart, but also on hourly RSI. So this was a sweet buying opportunity. Let me go to the various price charts here. And the other, I made a note, Thinkorswim does not give real-time yield data, which is atrocious. And so what I wind up doing is constantly referring to the Market Watch page, which I think is delayed. But yields hit, I think, 3% the first time that this wave 5 down punched the bottom of this wave 3 channel right here, this wave 3 purple channel. And so I had to buy there the first time, and then I got stopped out of that. And so this underthrow of this channel also corresponded to 30-year yield hitting its 41-year secular channel. So again, all of the reasons: punching out of the purple weekly log scale channel, punching out of the hourly daily wave 3 channel, hitting 618 targets on multiple time frames. This 618 target was for this wave 5. There's an initial wave 1 and 2 and then 3, and then this wave 4 again traded a lows to lows extension, a 38.2 retracement to a 618 target. So we were at the target on this degree of trend. You couldn't have, and again, down here on the hourly chart, a bullish RSI divergence. You couldn't ask for more reasons to get long here. And then also, you see this on ZB all the time, where the algos, they use the 18, 19, and 2000 bars to run stops and get position, which is exactly what we did. On this 1900 bar, I was looking at the tick chart when it happened, and in the blink of an eye, two 512 tick bars appeared down here, spiking this low, which is not people in the market just deciding that they need to sell into a bidless market, that they were that desperate to get short. It was algos running stops and getting positioned in the thinnest trading time in the market. And then coming out of here, again on the tick chart, these 3 hour bars traded they traded a measured move longs twice, lows to highs, which was a very low risk entry, and you could have gotten into this with as much size as you could handle for a 3-point rip off the bottom. So I hope I've done a good job of explaining why this was such a good buying opportunity on every time frame. And when we were down here, this weekly candle looked big and red and scary, right? It looked like all of these channels were definitively broken. And when you're looking at these time frames all the time, you start to develop this prevision of what the weekly candle will look like if this trades down here and you get a reaction. And I was thinking, this is scary, but I think this is going to hold and this is going to be a hammer candle. And at one point on Friday, they were trying to close it inside this purple channel and they couldn't get there, but it did turn green for like just a brief moment, and it was a perfect hammer candle. So um, so I think we are on wave 4 of 5. This is all wave 5 down, and we seem to have punched outside the channel on this wave 3, and now we're in a wave 4. In this 3 point rip, was that 3.5, 3 points? 3 points. Seems like a clean 5 wave move up, right? 1, 2, 3, 4, 5. And then we had what looks like an ABC down. And then things have gotten pretty choppy and messy here, but there are definitely algos defending the series of higher lows that we're making. The market has defended this low, and this low. So it's possible that Sunday evening, Monday, we'll get a 1 or 2 point squeeze up. Excuse me. So this could be in the process of making an ABC, but fourth waves can get messy and prolonged, and I don't expect this to be a quick one like this little ABC was, right, for this fourth wave of the third wave back here. And it's interesting, this is this purple channel is the wave 3 channel, and the center line has been acting as resistance. This wave 4 of 3, it could only manage one New York hourly close on the other side, and then that has acted as resistance here on Wednesday and then again on Friday, right? This was a rejection. So we need to break across the center line of this wave 3 channel. We need to get back inside here. And so this wave 4 of 5 could get choppy and prolonged. We could have let's say a green candle next week, and then the week after that is FOMC week. We could make a marginal new low on another red candle, and then we could have a green candle coming out of here. So we could print, in sort of a range down here, 3 or 4 weekly candles before we finally get some sort of reversal. And is that everything I want to say here? Briefly about fifth waves. If we're in a wave 4 and we're looking for a wave 5, wave 5s come in different varieties, right? There's a weak fifth wave that's basically a stop run across the range, makes a marginal new low, doesn't run to target, and reverses. So there's the weak fifth, and related to that is the failed fifth, where it makes a stop run across the range, but so many people are anticipating it that it stops a few ticks short of the low and doesn't even make a new low. I think those are both possibilities. And the other possibility is a fifth wave that runs to target or even trades in an extension, which could hurt people trying to find a bottom right here. So, I think we're in a fourth wave, and we're looking for a significant swing term low in the next 1 to 2 weeks. And that's all I have time for. Thanks, guys.